Welcome to the Daily Business and Finance Show. U.S. job market surges, Meta Platforms soars following earnings report, and Bristol-Myers Squibb exceeds expectations. A look at the latest financial news. Plus, Bezos' billion-dollar Amazon sell-off plan, dividend declarations from ExxonMobil and Chevron, leadership changes at Morgan Stanley's Global Investment Committee, Georgia's nuclear reactor delayed due to cooling system issues, and Intel's Ohio project halted, analyst insights. Stay tuned after this short ad break for a deep dive into these headlines. In January, the United States economy outperformed predictions by adding 355,000 non-farm jobs. This figure significantly surpassed the forecasted addition of 170,000 jobs. Furthermore, job gains for December were revised upwards to 333,000 from an initial count of 216,000. Average hourly earnings saw a rise of 0.6%, which exceeded the projected increase of 0.3%. On a yearly basis, earnings grew by an impressive rate of 4.5%, surpassing the expected growth rate of 4.1%. The unemployment rate maintained its position at a steady figure of 3.7%. According to experts, these statistics suggest that the economy is experiencing what is referred to as a soft landing, implying there is no immediate threat of recession.
Stock of Meta Platforms witnessed a 21% surge post an impressive earnings report, surpassing Wall Street's revenue predictions by almost $1 billion. The technology behemoth also declared its inaugural dividend and amplified share buyback plans by $50 billion. Market analysts foresee a promising future for Meta, with potential expansion in the realms of social media and short-form video advertisements, enhanced app revenue generation, and progress in artificial intelligence. Even though it is technically overbought at present, experts recommend it as a robust long-term investment.
Bristol-Myers Squibb's fourth quarter results surpassed predictions, recording a non-GAAP earnings per share of $1.70, along with a revenue of $11.48 billion. This marks an increase of 0.6% compared to the previous year. The company anticipates low single-digit revenue growth for the year 2024, projecting a non-GAAP earnings per share ranging from $7.10 to $7.40. This forecast does not take into account any pending transactions.
Jeff Bezos, the executive chairman of Amazon, intends to offload up to 50 million shares by the beginning of 2025 as per the company's latest disclosure. This action could potentially earn Bezos approximately $8.6 billion. Other top executives such as CEO Andy Jassy and CFO Brian Olsavsky have also set plans for selling their shares. Following a robust Q4 report, Amazon's shares experienced a rise of 7.9%.
ExxonMobil has declared a quarterly dividend of 95 cents for each share, keeping the same rate as before. The forward yield is currently at 3.71% and will be payable on March 11th to shareholders who are recorded by February 14th. Even though Exxon surpassed earnings per share estimates, its revenue was lower than expected by $4.48 billion. There was an increase in oil production during the fourth quarter. However, natural gas and gasoline saw a decrease.
Chevron has declared a rise of 7.9% in its quarterly dividend, which now stands at $1.63 per share. This will be payable on the 11th of March for shareholders who are on record as of the 16th of February. Although Chevron surpassed earnings per share estimates, it fell short in terms of revenue by approximately $6.2 billion.
Morgan Stanley's leading U.S. equity strategist, Mike Wilson, is relinquishing his position as the chair of the Global Investment Committee. His decision to step down is driven by a desire to concentrate on crucial institutional clients. Lisa Shalit will take over his responsibilities. Meanwhile, Ellen Zentner, Dan Skelly, and Steve Edwards are set to join the committee. Despite these changes, Wilson will continue in his role as Chief Investment Officer.
Georgia Power, a unit of Southern Company, has reported a further delay in the commencement of commercial operations for Unit 4 nuclear reactor at its plant Vogtle. The new expected start date is now in the second quarter. This postponement, which is due to vibrating pipes within the cooling system, will not impact the overall project expenses. However, it could lead to a potential loss of $30 million per month in profits after March.
Intel is experiencing delays with its $20 billion chip manufacturing facility in Ohio. Bernstein reports that these delays are not due to technological issues, but rather because the company does not require the capacity at this time. The construction was originally scheduled to begin next year and be completed by late 2026, indicating a shift in Intel's revenue expectations. Meanwhile, other global projects are ongoing in locations such as Arizona, Oregon, Israel, and Germany. In related news, Taiwan Semiconductor has also postponed operations at its Arizona plants. Thank you for tuning into the Daily Business and Finance Show. Stay informed, stay invested, and we'll catch you on the next episode. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.